Today, I want to talk about how Citadel has just hired a Department of Justice attorney, and not just any DOJ attorney, but the guy that's been leading the short seller investigation for the last 2 years. At this point, the SEC's and DOJ's shame knows no bounds, so stay tuned and let's make some money. And now I'll dive straight in with the key information. So, Annie Post tweeted saying, guess who Ken Griffin just hired? The Department of Justice attorney who led its 2-year short seller spoofing investigation. Saying that attorney with the highest level information into the government's case against Citadel now represents Citadel in its NWBO spoofing case. So you may remember these articles starting back in 2021, but more recent articles about US action on short sellers is likely in the next few months. But then recently the US prosecutor who targeted spoofing misconduct has actually left the Department of Justice. That article says the head of the US Justice Department's team in Washington, tasked with prosecuting market manipulation and fraud, has left the agency to join a law firm focused on business litigation. Saying Avi Perry, who led the fraud section's market integrity and major frauds team for 2 years, has joined the Washington office of Quinn Emanuel LLP. You can see here on Avi Perry's LinkedIn, he recently left the US Department of Justice to now work for Quinn Emanuel. And as you can see from this article, billionaire hedge fund manager Ken Griffin is taking on the IRS with the help of Quinn Emanuel, the same law firm aiding some pro golfers' fight against the PGA Tour. So Avi Perry, the guy leading the short seller investigation and the major frauds team, left the DOJ for Quinn Emanuel, a law firm that Ken Griffin has just hired. As I said, it's crazy the Department of Justice and SEC shame knows no bounds. You may remember that video of Elon Musk the other day saying the SEC never went after the short sellers or the hedge funds that were shorting Tesla and spreading FUD day in and day out. He said it's because those employees that work at the SEC then want to go on to work for those same hedge funds. And this really is a prime example, as Avi Perry, the DOJ attorney, has just left the DOJ to basically go and work at a hedge fund or basically work at a law firm assisting hedge funds. It really goes to show some employees at the SEC or DOJ don't care about doing the right thing at all, nor do they even care about their careers at the DOJ. They just care about the money and their overall success in the law field. They don't care about actually stopping crime and doing the right thing. They, if anything, want to work for these criminals because the criminals pay more. You can even see from this recent interview, Ken Griffin is gaslighting and claiming that SEC transparency proposals are somehow counterproductive for retail investors. He's basically saying, no, the SEC doesn't need to implement any crime-stopping proposals. Crime stopping is counterproductive for victims or retail investors. I also wanted to give a massive shout out to the members of the Millionaire Mindset Trading Group. We've just reached 60 members in about 2 weeks, which I'm super stoked about. If you're already part of the Discord family, be sure to leave a comment down below, letting me know what you think of the group so far. Every single day we trade fast moving stocks and options on the S&P 500, Tesla and Nvidia. On top of that, there's educational videos, there's watch lists, there's weekly market recaps, and there's even more. On top of that, there's also a 100% guaranteed refund if the educational videos and trade alerts don't help you to make a profitable trade in 30 days. So guys, be sure to join the Millionaire Mindset Trading Group linked in the description below, and also check out the comments for the current members' thoughts and feelings.
What frustrates you the most about what he is trying to accomplish?
Well, there's a huge amount of effort to find solutions for problems that don't exist. Like that's if I want to put it in a sentence, it's why are we finding solutions for problems that don't exist? Now, here's what's remarkable. In one of Gary Gensler's market proposals, every retail order must be sent to a publicly displayed auction. So not only can the market maker front run that order, but every single market maker can front run that order legally. How in the world do you reconcile decades of regulatory decision making, all designed to protect retail investors, and undermine it in one foul swoop like this. So that's a great example of a solution. In this case, it's an anti-solution in search of a problem.
Now, it's crazy that Ken Griffin says the SEC are remedying problems that don't exist, when these problems absolutely do exist, and Citadel is at the forefront of all of these problems. Citadel has been fined in pretty much every country, time and time again, year after year after year, for exactly the problems the SEC are trying to stop. Recently in 2021, they were fined in Korea for violating local securities laws. They were then fined $97 million in China for engaging in alleged malicious short-selling practices. On top of that, they were also fined in the UK for failing to adequately report certain trades to the regulators. They were also fined in 2020 in Switzerland for violating trading rules and engaging in market manipulation on the Swiss Stock Exchange. Before that, in 2020, 2018 and 2017, they were fined in France, they were fined in Australia, they were fined in Italy, and they were fined in the European Union. Citadel has pretty much been fined in every single country, every single year, for doing the exact same thing they're saying does not exist, which is manipulating markets, maliciously short-selling stocks, and creating synthetic shares. And on top of that, recently in September 2022, they were also fined in the US for marking millions of short sales as long stock sales. Ken Griffin is simply trying to hide his guilt and simply trying to bash on the SEC for literally just trying to do anything they can. Crystal Ball also tweeted saying, "One look at the level 2s tells you all you need to know about AMC." He said Adam Aron isn't the reason we're spoofed to make the market look bearish, and he isn't the reason that funds get away with synthetic shorting every single day, and he isn't the reason orders get filled low off exchange or over the counter either. The reason why AMC experiences constant spoofing and constant synthetic shorting is because the SEC does absolutely nothing to remedy it. And that's why Hang Loose tweeted at Ryan Cohen saying to please save the world from the evil which oppresses it by doing this suggestion. Kevin Malone recently tweeted saying according to SEC ownership filings, if GameStop used its $1.2 billion in cash to repurchase its shares, there would only be 2 million real shares left in the real float, with 67 million shares shorted. Because the majority of GameStop investors have DRS their shares, those shares are all tied up and are unborrowable. So therefore, if GameStop used the cash to repurchase these shares, it would leave just 2 million shares left in the real float, but with 67 million shares shorted. That would expose synthetic shorting for all to see, not just with 140% short interest, not just with a few 100% short interest, but a few 1000% short interest. In this scenario, the float would literally be shorted over 30 times over. And I think at that point, the SEC would almost be forced to do something about the synthetic shorting for their own credibility. It would obviously make headline news, it'd make social media news, and everyone would be aware of the synthetic shorting going on, and potentially that the SEC were doing nothing about it. And that's why I think in this scenario, the SEC would be pretty much forced to go after the shorts for their own reputation. Especially as I think that GameStop is slightly less manipulated than AMC at the moment. It means that short sellers have taken their eye off the ball. It'd be a real possibility for Ryan Cohen to surprise these short sellers by buying back shares, exposing the synthetics. On top of that, Ryan Cohen and GameStop have already previously bought back shares in the past, and there's nothing to stop them doing it again. I personally think this would be a great play or a great idea that would indeed expose synthetic shorts if it catches those shorts off guard. Now finally, I also wanted to talk about this tweet from the SEC, saying in FY 2023, the SEC filed 784 enforcement actions, obtained orders for nearly $5 billion in financial remedies, and interestingly, distributed nearly $1 billion to harmed investors. Now, for the majority of this tweet, the SEC typically goes after those small investing criminals, stealing just a few $1 million. But it is actually interesting the SEC distributed nearly $1 billion to harmed retail investors. I've not actually seen or heard of any instances of retail investors being remedied, but maybe or clearly it does actually happen. So therefore, in the event the shorts were exposed and the SEC were practically forced to go after the shorts, at least we can be confident that retail investors would actually be remedied. On top of that, these shorts being exposed would either force the SEC to do something, or it would cause a massive short covering rally. A massive short covering rally like that would cause GameStop to squeeze, and considering we know there's an entire meme stock basket of stocks, if GameStop squeezes, AMC squeezes alongside. But guys, be sure to let me know what you think down in the comments below. And as always guys, be sure to ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers.